the factors that should be a red alert for investors.
Yes.
I think there's a lot of fake scarcity, fake infrastructure development, cookie cutter houses.
In theory, everything looks nice. My major concern is that this supply will not be absorbed, appreciated and liquidated at the same rate. And this is exactly why we need to understand the past, present,
This was the
future.
key point. You can invest here.
Or here, pretty much at the same price point.
So welcome to 2014. It's hard to find a person who has 3.5 million dirhams per year to sell. Okay, the catch is that this is not just for villas and townhouses. These guys are coming for the apartments and the houses. So this is your demand and this is your supply. Now let me just break it down for you a bit further. How do you analyze real estate, stocks, crypto, forex? It's basically by analyzing both historical data and micro and macroeconomics. So in today's video, we're going to have 5 timestamps. We're going to assess properties from 2003, from 2014, 2019, and 2025. And then, based on these 4 assessments, we'll explain to you the future. Yash is going to help us with the microeconomics angle.
So ideally, everybody is talking about 4 million.
Yep.
I've seen a lot of these real estate agencies. I mean, obviously us as well. We've posted that Dubai has hit 4 million in population,
Correct.
which is great. But now today's topic, when we're talking specifically about townhouses and villas, we're talking about families moving in.
Right.
What I really wanted to understand is the affordability segment.
Right.
Because even if there are 4 million as population, genuinely what is the percentage or what is the number that can afford it? So what I did is I looked into multiple sources on the internet. I spoke with actually some mortgage advisors as well as to today, if you look at the supply of townhouses and villas, all of the ready infrastructure, all of these ready communities, and what is coming up in the next, let's say, 5 years. So overall, with all of these communities, what is ready now, what is going to come up in 5 years, that's around 142,000 as stock. Now, one thing which I've realized is a lot of times when people are buying townhouses and villas specifically, they are buying it for end usage. So even during these off-plan launches, which developer launches, what I have understood or whatever I've realized in the last 2 years is 50% of those who are buying even in off-plan are actually end users now. They are relocating to Dubai. So, so ideally when I'm analyzing supply, out of the 140, I'm looking at almost 50 to 60% supply that will come into the market. Now, even if I say 60% of that supply comes onto the market, that's around 85,000 units. Interestingly, there's another data where right now at 4 million people, almost 2.5 to 3% of those have the caliber to earn anywhere between 1 to 1.5 million.
Right.
Now, when I talk to some mortgage advisors as well, to afford a home which is in the 5 to 10 million space, you need a salary between 1 to 1.4 million if you're taking a loan for a span of, let's say, 15 to 20 years.
I'm just going to stop you right there.
Yeah.
So this is what we're trying to explain. Okay. What they did in the past, what they're doing in the future. We're going to try and combine it with what's the population, what's the supply. Because these are factors. What are the most important factors? Apart from your typical, let's say, location developers, what is the demand supply? What is the population? Can the market absorb it? If the market can absorb it, what crowd is going to absorb which product?
No, absolutely. Because, today in Dubai itself, we have crossed 80,000 people, residents as millionaires.
Right.
Around 200 plus people as centimillionaires.
Right.
And almost 20 billionaires, right? If you look at the population today itself, that's around 4 million. Government projections are every 4 years we cross 1 million. Now, what I did is I like to have a more conservative approach on the population growth. I looked at the last 3 years growth. On an average, Dubai population, as per Dubai population clock, grew on an average year by 3.5%. So ideally by 2030, where as per the government we should cross 5 million, I say we will be at around 4.6, 4.7 million as population. Now, looking at the number of millionaires that are coming in, I looked at the Henley and Partners Millionaire Migration Reports, the kind of millionaires that are flowing to UAE, and let's say even half of them coming to Dubai. On an average, conservatively, we would be having almost, let's say, 100 to 100 and let's say 10,000 people that can genuinely afford these villas and townhouses, right?
Yes.
And they will buy them for their families, they might rent it. In terms of supply, I'm looking at 85,000 as a number. In terms of demand, let's say I'm looking at 100, 110,000. Now, the only beauty is, in theory, everything looks nice. My major concern is that this supply will not be absorbed, depreciated, and liquidated at the same rate. And this is exactly why we need to understand the past, present,
This is the
and
key
future.
point. Can you repeat that last sentence again?
No, so ideally, even in theory, if we're looking at an undersupply of villas and townhouses,
Right.
I genuinely believe that, or my concern is that these products will not be absorbed, appreciated, and even liquidated at the same rate.
Absorbed, appreciated, and liquidated. That is exactly why. Let's just go to the past. So we're in 2003. You had communities like Emirates Hills. Now, Emirates Hills was divided into Emirates Hills, Meadows, Lakes, Springs, and Meadows. Then, Jumeirah Islands, there was Jumeirah Islands and Jumeirah Park. What is the difference? You had a clear demarcation between ultra-rich, rich, and affordable communities. There were no apartment buildings around. It is extremely clear. Now, let's understand the microeconomics of it.
You know, so when we look at the current supply, right? So if you start with Jumeirah Island itself, where we are, the only supply over here is 1,415 units. There's no future supply. If you talk about Jumeirah Park, there's currently 2,040 units which are ready and around 41 units which we saw right now which were under construction.
Correct.
Let's say remodify.
Correct.
Then if we go to Arabian Ranches 1, which was again a fantastic community that Emaar launched early 2003, currently there's no future supply. Everything which is ready is around 4,498, almost touching 4,500. And let's say last, if we talk about Emirates Living itself, it's divided into, you have your creme de la creme Emirates Hills, you have Meadows, Springs, Lakes, which are again townhouse villa communities. Now these itself are almost 7,100, 7,200 units. Then you have a clear demarcation between the apartments and townhouses villa. In the apartments, you have two major communities, the lakes and the views, the greens and the views. And both of these combined have almost around 3,500 units.
And no future supply.
And no future supply.
No, it's very important to understand the future supply. We are coming to the point. We're talking about the past, right? Now, there's a lot of communication telling people that the rents are reducing, the sales price are reducing, properties are not getting sold as much. Now, I don't understand people look at it as a negative sign. Technically, it's a positive sign because in these communities, these are at least around 70% end users. These are homeowners. It's very difficult. So recently we had a client who is one of the youngest billionaires of India. We're trying to find a house. He's willing to pay around 3.5 million dirhams. It's hard to find a house for rent. It's hard to find a person who has 3.5 million dirhams per year to sell. But let's not digress off topic. Let's just stick to this. You understood the microeconomics of our first timestamp. Now let's go to our next timestamp, which is 2014. We are going towards MBR district, Mohammed bin Rashid city. Towards the end of the video, you'll understand the importance of assessing the supply, and we're going to understand the demand, and then we're going to understand what are the right products we should be targeting and why. So we were, if you see Burj Al Arab, so beyond Burj Al Arab is where the entire Emirates Hills, Meadows, we covered that location. That is 2003. So as you can see, Business Bay, downtown, Dubai Marina, all the prime real estate, 2003, that's what happened. 2014, what happened is they realized everything was more Mediterranean, Arabic style, less light. People wanted more modern houses. So came Mohammed bin Rashid city, which comprises of District 1, Sobha Heartland. I'll show you that. Sobha Heartland. In fact, give me the phone. Let me just shoot, give me this. I just really want you guys to see, okay? So you see District 1, you will see District 1 Phase 2 and the Naya residences over there. Maidan Racecourse, you have your Sobha Heartland. And then Heartland to that's different, but that's one end. This goes all the way up to Dubai Hills. That was the plan of Mohammed bin Rashid city. Okay, so now let's go understand the microeconomics. I've covered the geographical part. Let's get into the specifics now. So it's very important to understand these patterns, right, to analyze investments. So 2003 was our first high.
Sure.
The second high was in 2014 after the introduction of escrow accounts in 2013. Now, MBR City was one of the first, let's say, 10,800 hectares of land, which is larger than Manhattan, where they wanted, well, I'll tell you the key factors were, they wanted a residential district, like an entire city within a city concept. That is why they wanted high-end communities, like Sobha Heartland 1, different design, District 1, District 11, Dubai Hills. They wanted merger. Okay, so there's Emaar, there was Nakhil, there's Sobha, District 11, private developers. Now in 2014, the concept, so in 2003, it was, let's say, Emirates Hills, Meadows Springs.
Sure.
Ultra rich, affordable. Over here, it was ultra rich, affordable went to suburbs. So 2014 is when they introduced the suburbs concept. So in the suburbs went your Damac Hills to Villanova. So we'll explain this on the map as well. Okay, Villanova, Damac Hills to Nashama Town Square.
Mira versus by Emaar.
Yes. So these suburbs concept started in 2014. Okay, the affordable segment, the salaried employees, they go in the suburbs, and this is prime real estate. So the rich and the ultra rich, and they wanted the concepts of connectivity, easy connectivity, sustainable and green. So in 2014 itself, they wanted two very important factors: economic and innovation hubs and key urban centers. So next to your Mohammed bin Rashid city, you had your Silicon Oasis, which was supposed to be the IT hub, AI, robotics, that's Silicon Oasis. And then you had Expo City, which is going to be like sort of your trading, exhibition. So this was not planned in 2020. The planning started in 2014. So understanding this is really important. Now the microeconomics part.
No, definitely. So see, if I'm looking at District 1, right now, current supply of townhouses and villas is around 1,480. Future supply will be around 680.
600.
So overall in District 1 itself, we have around 2,100 townhouses and villas coming up. Now you have one section which is your townhouses and villas, and then you have one section which is your District 1 residences. In District 1 residences itself, right now around 1,250 apartments are ready, and only 300 units are coming. So in total, if you look at District 1 as a community, your total supply is, let's say, slightly more than 3,000 units. Apartments, townhouses and villas considered.
This is secondary and off plan?
This is ready, and which is what is to come.
Both, everything
fine, right? 3,000. Let's say around 3,700.
Okay, off plan only, what is the number?
So ideally, future supply of townhouses, villas and apartments in District 1 is around 1,000. So out of the 3,700, 2,700 is ready. Apartments, townhouses and villas combined. And 1,000 units are going to be handed over, let's say, in the next 3-4 years.
Now, this point is very important when we come to present. Okay, as of now, we are in the past. When we come to the present, because these numbers are going to change, and that will help us make our right investment.
Absolutely.
Because when these numbers cross 7,000, 8,000, 9,000, 30,000 in some cases,
sure,
that's when we have to be concerned. That is why it's understanding microeconomics.
Absolutely. Yeah. No, and see, the interesting thing is you have District 1 and then you have Sobha Heartland 1, right? Sobha Heartland 1, currently as of supply,
You want to know, yeah.
there are 100 villas. 4 villas are under construction. So let's say 104 villas in the ready market. But Sobha Heartland 1, as of now, you have 9,517 apartments ready and another 3,004 apartments to come. So if you actually just look at the apartment supply of Sobha Heartland 1, it is almost 12,500 units, 33 towers, which they mention.
12,500 units.
So 12,500 units, 33 towers.
Okay.
Like even, I mean, I understand the villa part is negligible, adding 100 more. But overall in Heartland 1 itself, the density is going to be 12,600 units.
Now, this is important. District 1 was 3,000.
Yes.
All in all, ready and off plan together. And in Heartland, it is?
It is almost 12,600 all in all.
12,600. So you can understand, assess the value.
Yep.
Okay.
And if you compare Dubai Hills, right, which is again a huge success for Emaar, Dubai Hills estate currently in terms of ready townhouse villa communities, they have 4,061 units which are ready. The future supply which is to come is around 478.
No, this is where, now Dubai Hills, I want to discuss in present, not in the past, because Dubai Hills comes under the category of, which I will be discussing, hybrid. So I think in 2014, they had the concept right.
Yep.
Okay. But when some communities went into the hybrid mode in present, 400,000 supply. So this is where we can assess where to invest and where not to. We'll give you the numbers.
The beauty still of Dubai Hills, I believe, is if you look at, let's say, the supply of townhouses, villas itself, it is almost 4,500 to 4,600. You have 100 million square feet. So supply of area is also huge. The major concern was that Dubai Hills currently has 6,300 apartments which are ready, and there's another 11,000 apartments which will come up. See, in terms of townhouse villa supply, currently there's 4,000 units which are ready.
Correct.
Another 480 units will come into the market. So around 4,500 units in total as a supply will be there.
Agreed.
Apartments currently, they are 6,382 which are ready.
Yes.
And another 11,000 which are coming.
Agreed.
So almost 18,000 in terms of apartments. 17 to 18,000 will be the apartment supply in Dubai Hills.
Agreed. But where's this 400,000 number coming?
No. I misspoke. It's not 400,000.
Okay.
It is 4,500 in terms of townhouses and villas.
My bad.
And 18,000 in terms of
18,000 is not bad. Okay, so we have
the expanse is big.
Yes, so around 3,000 was in District 1, around 12,000 in Sobha Heartland, and around 18,000. I think it'll go slightly higher, around 20. In fact, I remember it's around 33,000 in Dubai Hills. The total number is going to come up to 33,000. Now, I feel like this sort of transition of apartment buildings coming in villa communities didn't start in 2014. But 2014 it was absolutely separate. Sobha came up with that concept. But did it work? Did people appreciate it? It has come up in Ketura Reserve. It's coming up in multiple villa communities which will come in the future. The future ones, it's coming up again. But we need to understand the audience response. The people are actually going to spend money. Where will they put their money? Will they put their money in a place like Sobha Heartland 1 where there's an apartment building facing apartments? Yes, but if I'm buying a house for 20 million or 25 million, I don't want someone looking into my property. Same thing in Ketura Reserve, 50 million, but I don't want a apartment looking at property. Dubai Hills.
The master plan was unique. The apartments were still segregated to a point where the villas on the Gulf, you cannot really, unless you have a set of binoculars, let's say, you cannot really see into it. It's not still combined. But I think that's one thing which we will discuss later in the video.
And then Dubai Hills, having all these apartment buildings coming, what is the audience response? Has there been a fluctuation, or let's say demand has reduced because the supply has increased? I have a lot of good memories with this place. So this will be the last sort of blast from the past, and then we'll get into the future. But one of my first investments, I still have the picture of the handover, was actually in Nashama. So in 2014, is where the affordable segments, right? So as you can see, I mean, you will find yourself the transition between like an Emirates Hills to a Nashama, but the demarcation was very clear. This was the affordable segment. Yash is going to explain the microeconomics of it, but in this era between 2014 and 19 gave birth to, let's say, Nashama, Damac Hills 2, Villanova, Arabian Ranches 3, Mira Oasis, all of them. This was the concept. The suburbs, the affordable segment, beautiful communities. I mean, it's just the suburbs, but the community has all the amenities for a very, I mean, look at it. It's so beautiful, you know. But let's understand the microeconomics, and I'm going to get a coffee.
How, since we're in Nashama town square itself, you know, the interesting thing is Nashama town square and Mira Oasis. Nashama obviously sister company of Emaar, Mira Oasis developed by Emaar. The future supply is again zero, right? So the impact of zero, future supply is zero right now over here in townhouses and villas.
Okay.
Right.
Apartment.
In apartments there is. So in townhouses and villas, Nashama town square, there are 3,670 units as a supply. Mira Oasis, it's around 5,200 units. Nashama, in terms of apartments, here's again where that supply increases. There's almost 5,900 apartments ready, and future supply is 4,370 apartments.
Okay, now see, this is about 10,000 apartments, but in the suburbs.
Correct.
So this is important to understand. See, apartment in the city or apartment near a metro is a whole different ball game. Apartment in the suburbs is a complete different audience. So it's need to understand it.
Absolutely, because if you look at, let's say, the four communities, if you look at Villanova, Damac Hills 2, Mira Oasis and Nashama and Damac Hills 2 are the two where you have a mix of apartments, townhouses and villas. And obviously in Nashama, the apartments are, let's say, maximized in numbers. Damac Hills 2, interestingly, if you look at the supply, there's 9,800 townhouses and villas, and there's another 3,800 to come. So overall, Damac Hills 2, the total supply by 2030 will be around 13,700 units just of townhouses and villas.
So now, this is important to understand. Till now, all the communities I studied, the townhouse villa proportion was less. It was around 3,000 mark, maximum, okay? Now, for the first time, as you're proceeding to the present, you will see large number of townhouses come, 9,800.
Yep.
9,800. Now, when the number increases, what happens? Cookie cutter, smaller floor plans, supply increases, price gets capped. Now, one thing I must add in Nashama is that it's not facing as such any villa communities. That's a plus. So these are, the land parcel is something also that we'll discuss. Maybe on a personal call, one-to-one call, we can explain the difference in the size of the land parcel. Just
Sure.
Huge difference between Nashama Town Square and a Damac
Hills 2.
Hills 2.
Yep.
No, both are quite large, but there's a huge difference between a Nashama and a Damac Lagoons or a Damac Islands.
Yep.
Those are smaller communities. So in those communities, like a riverside, when large number of apartments come, it's a challenge.
No, absolutely. No, and I think even in Damac Hills too, if you look at the apartments, 900 apartments existing today, only 1,600 apartments to come. Now, I don't know again with Damac Hills 2, will they launch any more? See, I think it's more about understanding what worked in the past.
Yes.
What is now working in the present, but in the future as well, why are there demarcations with certain developers of apartments and townhouses?
Video is, we clearly identify the success of certain communities like Emirates Hills, Jumeirah Islands, District Front, 3 different master developers.
Yep.
I'm not saying they're the best floor plans, but they worked because of that clear demarcation factor. There are several factors, but now, for the first time, why are there so much of stress and confusion? Because products have mixed. Because people started getting, the hype is high, greedy, they're trying to increase the number. And that is where investors have started, mixed reviews have started
Sure.
coming up. But if we have clarity, okay, which product are we targeting for which segments? If it's a mass production, there's a cap, almost an immediate cap. Okay, I'm getting into a product where there's 9,000 or 10,000 townhouses. If the entry price is 2.1 million, I think my exit price will be capped at around 3.2, purely because of supply, and this is not a fixed number. There are other factors included. But if I'm targeting, let's say, the rich class, now an example of a property in Arabian Ranches 1,
Sure.
June in Arabian Ranches 3,
Sure.
Aura and Tilal Ghaf, we show those properties. Any segment that will take rich, not ultra luxury, rich. We'll find that there's another margin of slightly more. If there's margin of, let's say, 500 to 1 million in the affordable category,
Sure.
there's a margin of 2 to 5 million in the rich category.
Yeah.
And in the ultra, that goes towards the 10 million marks. That we're trying to segregate it.
Absolutely.
We are the microeconomics.
Now, perfect. I think now we'll head to the COVID era, and now what is going to happen?
The COVID era. Okay, let's go take case study towards the core. Let's take examples of, let's say, a Damac Lagoon with Tilal and
Tilal Ghaf. Sure.
to get clear idea.
Two non-Emaar communities, how they performed, let's say,
how to
post-COVID.
perform. Let's analyze that, and then we'll give you an insight into the future.
Sure.
So now, before showing you Damac Lagoons, I thought we'll run through Damac Hills. Because Damac Hills has been a very successful community for Damac. But same like Dubai Hills, you can... What are the numbers for Damac Hills?
I think Damac Hills, overall, if you look at it, the townhouse villa supply itself,
Right.
the ready townhouse villas are 2,685.
Okay.
And currently, which are under construction, very few is around 163. So, total supply for Damac Hills itself is going to be only 2,850 units.
Villas.
Yeah, in villas and townhouses. Now,
Apartments.
yeah, in apartments, the total supply which is ready is 8,237 units.
As you can see.
And which is under construction is another 800. So the
That's not
total supply of apartments in Damac Hills 1 is going to be 9,000 units.
Now, see, when we head back to the office, you'll understand why we are talking about the supply. I'm going to exactly try and show you a chart on how your investment will span out. Okay. But now I'm going to show you Damac Lagoons, so which we're getting into the era of 2019 to COVID of what went wrong with the market. So you can see Damac Lagoons right there. Now, what's concerning, your win or lose is one word called Sikka, otherwise known as green belt. You can see that this one you'll not be able to identify, but the back-to-back villas are literally back-to-back. There's no gap in between. And you saw the cookie cutter houses?
Yeah.
So, these are some factors that will affect your investment, and we'll have to analyze till what cap can your investment potentially grow. So these have not been colored yet. That what we saw was Costa Brava. So that's Tilal Ghaf you can see on the left. We're going to try and get into the community as well since it's ready. But I think let's enter the community and then we'll understand the numbers.
Yeah.
So now we're entering Tilal Ghaf. Now, I think successful communities have a similar aura, I think this is what I feel when I enter a valley, a Dubai Hills. In fact, I think the greenery may be slightly more, but small things like these, the road design, the floor plans, the quality of finishing, actually Tilal Ghaf really scored well.
If you actually look at this zone and you're talking about the COVID era,
Yeah.
there were three communities, let's say in this area, Ranches 3 by Emaar, you had Damac Lagoons, and you had Tilal Ghaf by Majid Al Futtaib, right?
Yeah.
If you just understand the supply as well, Ranches 3, 2,300 units which are ready and 1,800 units which are coming. So the total supply in Ranches 3 is almost 4,700 units.
See, what I like about Ranches 3 is that, okay, yeah, no apartment buildings. Yeah. See, those communities, let's say Villanova, Ranches 3, they're very successful.
Correct.
Because let's say a Damac Lagoons went up to like a 2.4 from 1.6.
Correct.
So we look at Damac Lagoons, 1.6 went to 2.4.
Yeah.
Ilan in this community went up to 3.5 maybe?
3.2 to 3.5.
Yeah. Same thing with Villanova, same thing with the Arabian Ranches.
Yep.
So why did not Damac Lagoons reach that about 2.4, 2.5 mark is what we need to identify.
Yeah, absolutely. No, because see, even if you see, let's say Damac Lagoons,
Yeah.
when I was assessing the supply, 940 units which are ready, 8,000 units to come.
Yep.
There's going to be almost, let's say, 8,500, 9,000 units itself in the Damac Lagoons. Townhouses, villas, they have almost, I think, 10, 12 clusters.
And Damac Hills opposite also has the same quantity, right? Around.
No, actually, interestingly, Damac Hills 1,
Yeah.
if you look at it, it has almost, I think, when we looked at the numbers, it was around 3,000 to 3,500.
houses, and then the
Apartments were bigger.
Got it.
Damac Lagoons, they've changed the script where it's almost 8 to 8.5, maybe close to 9,000 units in townhouses and villas, and almost 3,500 units in apartments.
Right.
Now, see, one thing which was interesting is, this is my analysis. I mean, let's say an Emaar community aside, but Majid Al Futtaim with one of the first communities like Tilal Al Ghaf, and then you had Damac. Even though the concept of Damac was interesting, a lot of people, were attracted to the whole lagoon community at those kind of price points. If you compare Santorini, if it was the first cluster, Santorini started at around 1.7. Resale market, it went up to 2.4, 2.5 as well.
Correct.
People made 50-60% profit on their investment.
Correct.
Something like an Elan. So actually, sir, very interestingly, if you look at the floor plan of Elan,
Yep.
and if you look at the floor plan of a Santorini, let's say 4-bedroom,
Yep.
which is a makeshift 3-bedroom. Sometimes the floor plan of Santorini was still, I would say, slightly better to a point where you had a closed kitchen.
Okay.
You had a clear demarcation between the kitchen and living room. Elan, because I visited Elan itself, your kitchen is actually in the way. Both of them are compact units. But again, your whole point where you can't just justify now, and especially now we're coming to the post-COVID era, you cannot justify one factor which can, make or break your community. It's now not just the floor plan, and it's a culmination of multiple
factors. Yes.
And I think now we'll
head to we want to head to the office and break down this information and give you a conclusion, and then we'll get into future potential investments and why.
Yep.
And what is the trajectory you can expect based on our historical observation and our micro and macroeconomic observations.
No, and one more point, because we were discussing Emaar, and there was one community which obviously we'll have to talk about, which was Valley.
Yeah.
And how something, or let's say how the beauty of a developer like Emaar, where they can adopt with time and they can adopt with trends. If you look at Valley, so basically Valley is broken down into, you have Valley Phase 1,
Yeah.
you have Valley Phase 2, and then you have this Valley Villa section where you have 4 clusters, Farm Gardens 1, Farm Gardens 2, Farm Grove 1, Farm Grove 2. Right. Now, Valley Phase 1 versus Valley Phase 2. Valley Phase 1, you have almost 23 million square feet as land parcel.
Right.
And if you look at, let's say, the supply, there's almost 4,000 plus units as supply. Valley Phase 1 was all about your affordability segment. It was just starting, very brand new concept for Emaar. So, if you look at their earlier clusters and earlier floor plans as well, specifically Eden, Urania, Nara, Thalia, the 3-bedroom, 4-bedroom sizes were, yes, a bit smaller. This whole concept of a plex. So in Nara, in Eden, in Nara, in Thalia, you have these concepts of a 7-plex, a 9-plex, a 10-plex. So you have a 4-bedroom, then you have 3 bedrooms, then you have another 4-bedroom. That's 1 plex. Interestingly, if you look at Valley Phase 2, the total supply, including, let's say, the new launch,
Right.
is almost around, let's say, 3,500 units. Valley Phase 1 is 4,000 plus. The calculation which I did is in terms of the volume, because Valley Phase 2 as an area is 22 million square feet.
Right.
It's pretty much the same area, but in terms of volume, it's actually a decrease by 23%, which is good because the density in Valley 2 is less.
I want to add, so apart from Sikka, I think a very important point that you mentioned is the plexus. Like in this phase, this transition phase of 2019 to 2024,
Yep.
communities which had these 9 plexes, 10 plexes, 7 plexes, to just clubbing in, and that gave that cookie cutter apartment sort of formation. Now Emaar is a visionary. Emaar is the most intelligent developer. It's just studying Emaar will help you. I used to invest in Emaar stocks because Emaar is brilliant, right? So using Emaar, we're going to define where to invest in the present.
Yeah.
That makes sense? Fair?
Absolutely. And just a couple of last points for viewers as well. In Valley Phase 2, if you look at the townhouses particularly, you have these 4plexes, and let's say sometimes you have these 6plexes. So it's now a 4plex or a 6plex.
Right.
One of the most interesting things, especially for Valley, and this is something which I really appreciate, Emaar, when you were talking about the Sikka.
Right.
Even from Valley Phase 1, if you go to Eden and if you actually look at the cluster plan, the back-to-back unit has an alley. It's a 6 to 6.5.
The green belt.
The green belt.
Yeah.
Right? If you even, for example, compare maybe the new Damac communities which are coming up, there are other communities as well. Their back-to-backs are really back-to-back.
Right.
You have the compound exactly.
Except Sun City. Sun City had except Sun City, all the new communities are the back-to-back are two. Again, we're not saying it's a. We are asking. We are saying let's analyze the investments and in where. At which phase of the master plan? Maybe if I buy in the start, I can make money.
Correct.
Maybe if I buy a corner unit, I can make money.
Correct.
Maybe if I buy a V3, I can make money.
Correct.
So, depending on the product. So, we are not saying anything is bad.
So coming back to, let's say now the drawing board, what we've done is property finder, property monitor, DXB Interact, a lot of tools, and we have actually in the last 3 weeks analyzed your tier 1 areas, downtown, Dubai Marina, your tier 2 areas, DVC, Furjan, a lot of these communities. What is the genuine supply, off-plan, ready? You're talking about apartments, you're talking about townhouses, villas, mansion. We've analyzed the coastline. We've analyzed these communities, which we let's say, obviously, we went through these communities today. Now, this is an interesting figure. So in theory, everything looks nice, but now, we have to understand a few things. If we go to townhouses, villas and mansions, this is the current ready supply, 85,000 units, 85,428 to be precise. This is off plan. This is what is yet to come. This is what will hit the market by 2030 in the next 4 to 5 years. So your total supply of townhouse, villa, mansions is around 142,000 units. Now, what we are considering right now, because a lot of times, even in off-plan launches, we've seen 50% of the buyers who are end users, people relocating with their families. But we are considering that 60% of these will be, let's say, released into the market. Let's say somebody will rent, somebody will buy these, but these will be the number of units that, let's say, will be available by 2030, 85,492. Now let's look at the estimated population by 2030. So currently we're at 4 million. On an average, looking at the growth rate in the last 3 years, we will reach around 4.75. Number of millionaires currently. Millionaires, again, for our viewers, somebody who has a net worth of above 1 million USD, which is almost around 3.7 to 4 million dirhams. This number is 82,100. The expected ratio, the way a lot of millionaires are migrating from different parts of the globe to UAE, especially to Dubai, the reports and charts are saying that this number by 2030, 2031 should double. This should be almost 160. But we are saying conservatively, even if this number becomes 110 to 120,000, which means ideally for these kind of units, which will be, let's say, 3 million, 5 million, 10 million, 15 million, if 85,000 units are released in the market, 110 to 120,000 people will have the economic caliber to absorb these. But here is the catch.
Okay, the catch is that this is not just for villas and townhouses. These guys are coming for the apartments and the houses. So this is your demand and this is your supply. Now let me just break it down for you a bit further. I've written down here. Okay. So if so today we saw the affordable segment. We understood what the rich and luxury segment is and the ultra luxury segment. Now, if the total supply is, okay, so total supply is around 57,000 units by 2030. We understand that. Now, okay, there's a 4.75 million population, but an above 5 million caliber, to get to invest in a property above 5 million, you need to have a salary of at least around 700,000 per annum.
Yep.
So how many people can actually buy? And this is your goal, your objective is entering into this market around 1.6 and exiting anywhere around 3 to 3.5. Now this does not exist This existed maybe up to 2019. Today, maybe around 2 you can enter. If you're lucky, you can exit at 3.5. At 3, the objective of this segment is entering at around 3 and then exiting around 5.55, and you can go up to, let's say, a 7 million. So this is your rich segment. And here's around 8 million plus. This is your ultra luxury segment. To further break it down, I've given you a guy, okay? So in 2021, I told you that, okay, whether it's 1 beds, 2 beds or 3 beds in apartments, this is your investor, right? At, let's say, 2 million, if he had 2 million rooms, he could buy in Sobha Heartland, Dubai Hills, Dubai Creek Harbour, Rashid Johnson Marriott. I actually have a video, price per square foot of all of these were the same. Where do you put your money? Now, same case over here. For example, a guy who had 1.6 million dirhams could buy a townhouse in Damac Lagoons, in Tilal Ghaf, in Arabian Ranches 3, in Villanova. Here it became 2.4, here it became around 3.2 to 3.5. Here it became around 3 to 3.3, and over here it's at around 3 to 3.2 again. So where can we sort of, now with these new numbers that Yash has presented, right, it's the market is a bit more picky. So these guys are a lot more picky. So yes, that's one angle. This you understood the microeconomic angle. Now on the other side of things, I think why you're trying to explain the past, in between there's a lot of confusion, but a master developer like Emaar brings you clarity. So what Yash was explaining between Valley 1 and Valley Phase 2, similarly what's happening in Grand Polo, there's an oasis. So I'll explain that location. So now, oasis, Grand Polo,
And this
is Heights.
supposedly is Heights.
Now,
This is something like a valley.
and even the Valley Phase 1 and Phase 2, if you assess, there is a big difference in Valley Phase 1, exact what Yash had explained in the video. So now they're going back. Why are they changing their strategy now? Why is it big difference in strategy for Arabian Ranches 3 or Valley Phase 1 versus Valley Phase 2 and Grand Polo? Because the market sentiments, Emaar identifies the market sentiments. So they're shifting now. Let's say your 120,000 investors till 2030. As a buyer, you really need to understand which product you are investing in to make a sensible decision.
Absolutely. And I think the whole point of this video, guys, was definitely we have a lot of great insights. What I think Zohaib is coming up in the market, there's a lot of noise now. There's a lot of stuff going on. But genuinely, I think with a one-on-one consultation, we'll break it down, we'll help you understand and,
So
where to put your money in.
In the future, quickly, because I'm trying to the video has gone really long. I'm trying to exit. Okay. So let's say in 2025, okay?
Yeah.
You have Grand Polo,
Yeah.
you have Heights,
Yeah.
you
We have two new Damac community.
Valley Phase 2,
Yep.
you have Damac's new communities.
Yep.
Damac. Then you have, let's say, Omniath is coming up something. You have H&H coming up with something.
You have Palm Jebel Ali by Nakil again.
Palm Jebel Ali. So what is your job as an investor? You need to categorize the investment into, okay, what does it fall under? Is it affordable luxury? Is it luxury? Is it ultra luxury? And then what is the supply? What is the demand? Will I be able to liquidate? Then the three factors.
Yep, absolutely.
What is it? Affordability, liquidity.
No, so ideally, absorption power, appreciation power, and liquidation power.
So absorption, appreciation, then liquidity. This is what we have to analyze, and that's why we have consultants like us. When you do schedule a Zoom call with us,
Yep, absolutely.
we'll be able to assess you, because it's tough to tell you which one is good, which one is bad.
Yep.
See, maybe Damac you can enter at 2 if you start at the right timing of the market, exit at 3, 3.3. But at the wrong phase of the market, maybe you can't achieve that. In Valley, okay, which product, which phase of the master plan are you? What is your objective? So it's complex. It really depends on the person.
Absolutely.
Yeah.
I think that's
Absolutely. If I covered everything. I think we covered. Let us know, what our next video should be. We're trying to now really upgrade our YouTube where, we give you as much information as possible. He is the macroeconomics guy. He's an architect himself as well, Yash. Indian, but has a British passport. His parents are in the US. So, really like a global citizen. So, any information that you need, let us know. Thank you for watching. Please like, share, subscribe. A lot of effort has been put into this video. So, show us some love. Thank you. Thank you. The fact is that should be a red alert for investors.
Yes.
I think there's a lot of fake scarcity.
Yep.
Fake infrastructure development.
Yep.
And there's one more. What is it?
Cookie cutter.
Cookie cutter houses. Cookie cutter houses. You want to talk about which one? You said something funny.
The world island itself.
In terms of fake infrastructure or fake scarcity?
No, I think fake scarcity is, see, my whole point was scarcity has no value if it's not linked with supply demand at the end of the day.
Correct.
I mean, you can have an extremely scarce product technically, which it's one of a one. Yeah. Nobody has made it.
Yeah.
But if there's no genuine demand for it, at the end of the day, it's only going to be one product which will stay there, which will be stagnant.
Yeah.
I think if you look at this as well, I think you can obviously elaborate more on this.
This is a fantastic way. You saw the mall, school, fuel station, and small stores. You've got the clinic right here. You've got the house here. So this is genuine demand. This reflects. You can see the traffic. This reflects genuine demand. They're not cookie cutter houses, and it's not fake scarcity. Now, fake infrastructure development, like for example, nowadays I've seen people clubbing the south of Dubai with Palm Jebel Ali. In fact, south of Dubai, Expo City, Palm Jebel Ali, everything has been called the south. But have you genuinely been there? Go to the site, go to the location. Do you want to live there? Who are the people living there? For example, I know some community in the south where most people who work in Abu Dhabi live over there because their families want to live in Dubai.
Yeah.
So analyzing real infrastructure development, analyzing scarcity, actual scarcity, and cookie cutter houses are a big concern. I think these red alerts are extremely important.